Hello everyone. As all of you know that we love to do weekly webinars primarily to cover new ideas because there is a lot that's happening in the emerging space of alternates. In that rhythm, today we have another fund which is basically a foremost fund in the space of SME exchange. This fund is named as Chanakya Opportunities Fund. It's a category 2 alternative investment fund. And this particular webinar is a product webinar to understand the target universe, the philosophy, the approach, and the ideation of this fund. So this particular fund invests, as I said, both in listed and unlisted space and is SME exchange focused fund. The pedigree of the fund manager Ankush, who is one of the speakers today, with us, is quite decent in terms of returns. I am not talking anything about returns before we kind of hear from Ankush, as well as we have another senior guest who is the co-founder of this fund, Jaimin. Both Ankush and Jaimin will kind of spend first 25 to 30 minutes giving us details of this fund in terms of its philosophy, approach, and track record. And then followed by that, we'll have detailed questions and answers to understand, the fitment of this particular product in terms of who are the right profile of investors, what is the expected return, what is the fee structure, what are the risks. All these things, we will try and understand in form of Q&A as well. Though I'm sure part of this will be covered in the first section of this entire presentation. Formal welcome to both of you, Ankush and Jaimin.
Thank you.
This particular platform of ours, PMS AIF World, is dedicated to the space of alternatives, and we have a rhythm of doing webinar every week to, as I said, cover some of these new products. And it is kind of, I would say, my pleasure to kind of welcome you for this webinar.
Okay.
Over to both of you to cover whatever you have planned for the presentation. I will switch off my camera now, and the floor is yours. We'll again do Q&A after 30 minutes.
Got it.
Thank you. Thank you, Mr. Kamal. Good evening, everyone. So before introducing the category 2 Chanakya Opportunities AI Fund, I would like to first explain why we believe this fund is today's time need. And to understand this, we divide SME growth in two phases, pre-COVID and the post-COVID. Just a minute. So as we have seen in this chart, so BSE SME IPO index has delivered a 52.6% CAGR return in the last 10 years, while the BSE IPO index of main board companies delivered a return of 21.4%. So there's a clearly 31% alpha of SME IPO index. But the most important points to be understand here is in the pre-COVID phase, both index has almost delivered the same returns, while on the post-COVID phase, the BSE SME IPO index has given a 31% higher return. So now understand the factor that attribute to this substantial growth of SME market in post-COVID phase. So I believe the Indian government has implemented a range of supportive policy and initiative tailored specifically for SMEs, and these include simplified regulation, access to finance, tax incentives, and dedicated platform business development. And these measures have created an enabling environment for SMEs to thrive and fostering their growth. The digital revaluation has played a pivotal role in accelerating SMEs growth. The widespread adoption of technology and digital platform has enabled SMEs to enhance their operational efficiency, expand their customer reach, and tap into previously inaccessible market. Acceptance digitalization has unlocked new growth avenues for SMEs. And the most important, the rise of e-commerce market has played a role in the growth of SMEs. E-commerce platform has enabled SMEs to reach a global customer base and scale their business rapidly. So now that we have understood the reason behind the rapid growth of SMEs in the last 2.5 years, so it is equally important to assess their trajectory for the next 5 to 7 years. And we believe these are the three factors: the government policies and initiatives, the rise of the digital economy, and the growth of the e-commerce market. will be played a vital role in the growth of the SMEs in India to the next 5 to 7 years. And out of this, the growth of e-commerce market played a huge role. The e-commerce market in India is growing rapidly, and SMEs are increasingly using this platform to sell their products and services. As per the Morgan Stanley's report, e-commerce market in India in 2014 was $14 billion. In 2022, the e-commerce market in India was worth rupees $74.8 billion, and it is projected to reach by $200 billion by 2026 and $350 billion by 2030. So these numbers clearly indicate this. As the e-commerce business has increased, these SMEs companies sales also increase, and that will increase their growth and the profitability. Now comes to our fund, Chanakya Opportunities Fund. So Chanakya Opportunity Fund is a sector agnostic category to AIF that invests in profitable SME companies with high potential opportunities and unorganized sectors. So when we comes to the concept behind of this Chanakya Fund, so the founder and the fund manager of Gupta, who has been managing a SME portfolio of rupees 40 crore for the past 5 years, and her portfolio has a CAGR of 30% with 10% alpha, which means that she has outperformed the market by 10%. The promoters of the fund have been investing in SMEs for a long time, and they believe that there is a large opportunity in the SME space, and they have to pass on this benefit to real investors who want to invest in SMEs but have not been able to do so due to several reasons. And here, the concept of this Chanakya Fund comes, and we have launched this fund, Chanakya Opportunities, which is completely focused on the SME exchange companies. Chanakya Opportunities Fund act as a medium for investment in SME sector. The objective of the Chanakya Opportunity Fund is to provide growth, capital and strategic support to SMEs with the potential for growth and profitability. The fund will invest in attractively valued companies and good management teams and strong growth prospects. The fund will also contribute towards the creation of sustainable and scalable business. Now the big question is why the investor will invest in Chanakya Opportunities Fund. So there are several benefits to investing in Chanakya Opportunities Fund. First, the fund provides investor to access to a diversified portfolio of SMEs. Second, the fund is managed by a team of experienced professionals with a proven track record of investing in SMEs, and the fund offers investors a potential for attractive returns. When now the comes to our investment strategy, so our strategy is very clear to invest into the SMEs company. So the first 15% for 51% of our fund will be invested into the private companies that have the potential to get listed on the SME exchange within the next 12 to 18 months. And these companies are available at very attractive valuation, and we believe they have the potential to deliver returns of 3x to 5x on the day of listing itself. The next 24% of our fund will invested into the listed SME companies, which we believe these companies have a potential to grow by 2x or 3x in the coming years. And the last 25% of our fund will invested into those listed SMEs companies who initially on board on the SME platform and now migrate to the main board and currently trading under the small cap categories. And these companies have a low price to earning ratio. So the target companies, so which companies we will target for our fund to invest. So the fund will invest in primary companies that are IPO listing bound with a turnover of rupees 25 crore and above. Here, we also want to clarify that the fund will not invest in any turnaround, startup and pre-revenue businesses. The fund will invest in SME listed profitable companies with high potential opportunities in unorganized sector. The ideal company for the fund is one that is focused on solving some scalable real life problems. For example, Jugnu is a ride hailing platform and that connects customer with bike taxi and auto rickshaw. It has solved the problems of last mile connectivity in India, which is previously a very challenging task. The fund will look for companies with upscaling potential of 3 to 5 times in 5 to 7 years. The fund will also invest in successful and growing franchisee business companies. The fund will look for a company with a strong position in non-cyclical niche market segment. The fund will also look for companies that offer essential non-discretionary products and services with pricing power. The fund will invest in cash generating, low capital intensive, good profit margin, high returns on capital employed and equity businesses. So as our fund is sector agnostic, so these are the sectors which we are targeting, like auto component, chemicals, FMCG sector, pharmaceutical, ITs, healthcare, electric equipment, energy efficiency, etc. So our investment process. So for any fund, the investment process is a crucial and the critical part. And our focus is to our focus on the right business, right promoters, and right valuations. And for this, we have distribute our investment process in four parts, beginning with the deal sourcing and then deal execution and active portfolio monitoring, and the last, the exit. So our investment process begins with a strong emphasis on proprietary deal flow. We encourage an extensive network of investment bankers, advisors, chartered accountant, company secretaries, and SME promoters. Additionally, our tie with venture capitalists and investment bank allow us to access exclusive deals opportunities. Furthermore, our top-down themes and proprietary deal ideas enable us to uncover unique and compelling investment prospects. The next part of our process, once the potential investment opportunities are identified, our investment manager evaluate them against selective investment criteria. Through evaluation is followed by the approval of the prospective investment by the investment committee. To ensure a comprehensive understanding of the opportunity, we conduct due diligence covering commercial, accounting, and legal matters. Our commitment to strong corporate governance plays a vital role in this stage, instilling confidence and mitigating the risk. In the next step of our investment process, we believe investing in a business is just the beginning, and the true value lies in actively monitoring and supporting portfolio companies. Leveraging our expertise, we provide strategic and operational advice to our portfolio companies, assisting them in navigating challenges and capitalizing on growth opportunities. Active monitoring, guidance, and support enable us to strengthen governance and ensure the long-term success of our investments. In the last part of our investment process, that is exit strategy, we pursue various exit strategy based on the circumstances and objective of each investment. These include exit through the sale of strategic and financial investors, sales on the exchange, and by carefully considering these options, we aim to maximize returns and provide liquidity to our investors. So this is our target portfolio characteristics. So we invest in between 2 to 10 CR in any of our investee company. So total target investee companies in our fund is 20 to 25. And we have a minority stakeholder holding in all of our investee companies. So what does it mean by the minority stake? So we will not take more than 49% of investment in any company. We will not take the controllable part of any of our investee company. So skin in the game, this is the unique USP of our product, where sponsor has given 15 crores of commitment, and the Kresha Gupta, the founder and the fund manager of Chanakya Opportunities Fund, has committed 5 crores to the fund herself, and this shows her confidence in the growth potential to the SME sector and her belief in the fund strategy. So now understand what are the benefits when a sponsor and fund manager itself invests a significant amount in this fund. So when a sponsor and a fund manager itself invest a significant amount in the fund, it shows that they have a high level of confidence in the fund success, and this can boost investor confidence in the fund and making them more likely to invest. The sponsor and the fund manager investment creates alignment of interest between them and the investor. This means that the sponsor and fund manager has a vested interest in the success of the fund and will work to ensure that the funds perform well. So now comes to our risk management part. So we understand the managing risk associated with SME investment is a critical aspect of any SME focused fund, and including Chanakya Opportunities Fund. So Chanakya employs a range of strategy at the portfolio level to address and mitigate these risks effectively. Here, how Chanakya address risk associated with SME investment. So, Chanakya Opportunities Fund maintains a well-diversified portfolio of SME companies across various industry and sectors. And by spreading investment across multiple companies, industry, and geographical location, the fund reduces the impact of individual company specific risk and overall market volatility. Second, before including any SME company in the portfolio, Chanakya conducts extensive due diligence and rigorous research, and this process involves analyzing financial, assessing business model, evaluating management teams, and understanding potential risk specific to each company. In the next step, when Chanakya Opportunities Fund employ active portfolio management. This approach involves continuous monitoring and evaluating of our investments. If any SME companies risk profile changes significantly or if new risks emerge, the fund management team takes prompt action to reevaluate the position's suitability in the portfolio. And the last, our Chanakya Opportunities Fund is managed by an experienced team with the proven track record in the SME sector. And this expertise in identifying, analyze, and managing risk associated with the SME investments and add a layer of confidence for investors. So this is our key investment management team. So Kresha Gupta is the founder and the fund manager of Chanakya Opportunities Fund. She began her career with Vodafone Idea Limited as a member of the Limited as a investment relations and the treasury team for over 2 years. Her passion for equity has driven her own for more than 5 years, and she is now dedicated to Chanakya Opportunities Fund. Currently, she is managing her family fund of rupees 60 crores, out of which rupees 40 crore of AM itself invested into the SMEs company. She prioritizes capital preservations while seeking attractive risk-adjusted returns. She has successfully generated a CAGR of 30% on her portfolio, with keeping an exit strategy always planned before investing, and she has been able to generate higher returns. We're talking about my part. So I have total 13 years of experience and I have started my journey into the commodities and currency research. From the last 5 years, I'm actively tracking the equities market, and in my previous organizations, dealing with the more than 100 plus ultra HNIs, where I am handling approximately 200 crores of AM through the NDPMS advisory model. I also like to inform we have recently added Mr. Sumit Podar in our team as an advisory board member. He has over 15 years of experience in the equity market. He's having worked with the top institutions like Aditya Birla Sun Life, Star Union, Daiichi Life Insurance, and Tata Consultancy Services. He has a proven track record of delivering a exceptional performance. As a head of equities fund manager and the analyst, Sumit successfully managed over 2,000 crores of AUM. So this is our fund features. So as it is a category 2 close-ended AIF. So total fund size of this fund is 100 crores with a green shoe of INR 100 crores. So drawdown period is 12 months from the final close. Tenure of this fund is 5 years from the first close and extended by 2 years, 1 year each, with the consent of 2/3 of the investors. So minimum commitment amount is 1 crores and the minimum initial drawdown is 25 lakh rupees, and the remaining amount of investment will ask for a 3 equal installment of 25 lakh each on a quarterly basis. So our fund is invest into the SME sector through listed and unlisted companies. Hurdle rate, again a big USP that is of our product. So normally in the AIF industry, we have seen a hurdle rate in between 10 to 12%. As we are very confident on our strategy, we put a hurdle rate of 15% per annum pre-tax and post-expenses. And I believe this would give investor confidence to invest in such fund where fund managers have a confidence they will at least deliver a minimum 15% of IRR. So that's it from the Chanakya Opportunities Fund, and we hope you find the presentation informative and helpful. Now I would like to invite Mr. Jaimin to share his view on the SME exchange and its growth. Mr. Jaimin, over to you.
Thank you, Ankush, for a brief intro on the Chanakya Fund. So I'll thank you everyone for having us on this webinar and listening to us. So, firstly, Ankush has explained rightly about the Chanakya Opportunities Fund. What is it? All its concept and features, investment strategy, everything has been explained perfectly by Ankush. Now, I'll explain you more on Chanakya's proposition in the SME exchange. So, what is SME exchange? SME exchange is a small and medium enterprise exchange of NSE and BSE. So there's NSE Emerge and there's BSE SME. Both of these exchanges are have a right to approve an IPO on their own. So SEBI approval is not required for IPO on SME exchange, and the companies who are listed on SME exchange are more of regulated by the exchange regulatories. And so here, small enterprises who don't have more of the compliance team or more of the regulatory supports get an opportunity to get their shares into the primary market and then get a listing benefit into the secondary market. So SME exchange was introduced in 2012. Since now 10 years, almost SME exchange has given very huge returns. Previously, also Ankush has given the data that that the out outperforming Nifty or outperforming IPO index has been there since last 10 years. So if we see the stats of the SME exchange companies who have got listed on the SME exchange, so on and about total 700 companies have been listed on NSE and BSE both. Out of the 700 companies, and they have combined raised about more than 10,000 crores. So when we say this 10,000 crores combined they have raised, this has been the figures of the last 10 years. In the last 1 year itself, they have raised more than 500 crores. So in this industry and this exchange is completely growing. Is very highly growing. We can see these figures in this way also. Compare last 10 years में SME exchange पे IPOs आए थे 10,000 crore के 10,000 crores के, and in this year 2023 itself, when an IPO is coming of 45 crores or say 30 crores, so it is getting subscribed by 100 times. There was a company Kaka Industries Limited which got listed a week back. That company got a subscription of 200 times. But 25 crores के IPO में 200 times subscription. So 5,000 crore का liquidity infusion in the primary market. So this is the liquidity coming into the SME exchange now, which was not previously there. This is the reason that SME exchange is going to be the future for next 2-3 years. It is booming. The liquidity is coming in. The regulatory norms are improving, and the confidence of the investors are also improving with all of this supports. So 700 companies almost got listed. Out of this, 40% companies got migrated to the main board. So when a company gets migrated to the main board, there's a clear view that these companies have followed the compliance norms and have given good returns. Only then these companies were able to migrate to the main board. So any company has to stay at least 2 years on an SME exchange, and only then that company get migrated to the main board. When this company stayed on the SME exchange for 2 years and then they migrated, so this is must that they must have shown good figures in the growth side, in the profit, in the revenues, and even the prices must have shown good returns for the investors. Only then they would have got opportunity to migrate to the main board. So the previous data clearly states that 40% of the companies are potential enough to give good returns and to grow. Secondly, why we say that you should invest in SME exchange. So when we talk about investing in SME exchange, there are some misconceptions about SME exchange, that it has liquidity issue, or the companies are which are getting onboarded on the SME exchange coming with the primary IPO are not properly, due diligence is not done properly. But this all has been a vintage thing now. If we see the stats of even 2023, more than 50 companies have got listed on the SME exchange. 50 कंपनीज के IPO आए सिर्फ करंट ईयर में 2023 में, with an average ticket size of 25 to 30 CR of IPO size. All the IPOs have seen a huge subscriptions in the primary market, and when getting listed on the listing day also, secondary markets में more than 70% companies have listed above the IPO price, and more than 25% companies are still today trading at 50% above the IPO price in the span of 6 months. So this is the huge potential of SME exchange. Now, when for an individual investor to shortlist and to filter, to do the due diligence of a company, it is very difficult, because SME exchange की जो companies होती है, उनमें उनको बहुत थरली और बहुत अलग इन्वेस्टमेंट थीसिस के साथ मॉनिटर करना पड़ता है, बहुत अलग एंगल से सोचना पड़ता है. दिस आर नॉट स्मॉल कैप और लार्ज कैप कंपनीज जिनके पास ऑलरेडी बहुत अच्छा कंप्लायंस टीम एंड एवरीथिंग इज रेगुलेटेड. दिस कंपनी आर काइंड ऑफ अ ट्रेडिशनली ड्रिवन कंपनीज, छोटी कंपनीज होती है. एंड चाणक्य इज गोइंग टू इन्वेस्ट इन द प्रॉफिटेबल ऑर्गेनाइजेशंस ओनली. इट इज नॉट गोइंग टू इन्वेस्ट इन स्टार्टअप्स. वी आर लुकिंग फॉर कंपनीज who have a good vintage of 5 to 10 years, are profitable, cash flows are positive, good revenues, customers are good, suppliers are good. So this all terms are looked into in an SME exchange. So यहाँ पे ये सारी terms को देखने के लिए a fund is required or a QIB is required to monitor all these things and to do a proper due diligence with a team of research analysts, with a team of specialists in the business. So that is why we thought that lastly Krisha has also been investing in the SME exchange since the last 5 years. Now she thought that let's introduce a fund in the SME exchange who can do all of this filtrations, monitorations, have a team, and we can provide the same support to the investors. So that is how we thought of launching this Chanakya Opportunities Fund. And the concept behind Chanakya is having an investors doing the due diligence is only because to take the benefit of the maximum returns. So SME exchange has the potential to give a multi-bagger return, as it is one of the fastest growing, or we can say one of the very fastly growing exchanges in India. Now, even when I say the 2023 stats, so companies giving return of 50%, there are 25% companies who have given return of 50% and above. So shortlisting such companies is the role of Chanakya. The returns, we obviously know that Chanakya SME exchange is going to give good returns, but to identify and to shortlist the small companies, particularly those companies who have the potential to give 50% plus returns, is the role of Chanakya. So mainly, I would say why invest in SME exchange is for the multi-bagger return opportunity it provides, and it also includes risk with the multi-bagger return opportunity. So that is why we say that having an organization like Chanakya will filter out the risk factors with its investment thesis. So Chanakya has an investment thesis of to and fro, where they test the suppliers, where they test the customers as well before investing in an investment company. They test the promoters. The vintage is also checked, that how old is company, what are the previous 10-year records. This all the figures are checked. So mainly to eliminate all of the non-investable companies. So growing SME, basically SME had a very high myth that SME doesn't have a liquidity, and I would honestly say that still SME exchange has not come up to its 100% potential liquidity. It is still at 40 or 50% of its potential liquidity, because when we say in primary market, the IPOs are getting subscribed by 100 times. So when a 25 crores IPO gets subscribed by 100 times, so there's a liquidity of 2500 crores coming into the primary market. But when we say the same liquidity in the secondary market, so the average daily volume in SME exchange is about 150 crores. So this secondary market has still not seen that high liquidity. This primary market liquidity will eventually, in a span of 2 to 3 years, may divert to the secondary market. And when this happens, the markets, SME exchange companies will have a very high potential buyers in the market of their stock. So this increasing SME market liquidity, this stats, if you see last 3 years stats, it clearly shows 100%, 200%, 300%. So a growth level in the liquidity position will eventually increase the demand of SME companies in the market. So there's a continuous increase in the SME market liquidity. Even the FIS, DIIs are increasing. We can see in the last 3 months, majority of the SME IPOs have seen anchor investments from QIBs, and the QIB portion is getting 20-25%, 20-25 times oversubscribed. So a liquidity of coming of 400-500 crores coming into the primary market in SME exchange gives a good confidence that this liquidity is going to highly increase in the next 2 to 3 years in the SME exchange. The rise of SME IPOs, so this stats is clearly very understandable that 2019 43 IPOs, 2027 IPOs. Obviously, we all know 2020 was a bad year for all the industries. So 21 58 IPOs, 22 119, and 23 already about 100 IPOs have come, and this is just a half year. The next half year, so 200 companies to get listed on the SME exchange. This increasing companies in the SME segment will eventually increase the whole momentum and confidence of investors in SME segment. So this is a very early in investment opportunity to get hands on the SME companies. As these companies will be growing, market liquidity will be growing. So overall, the whole sentiment of SME will be improving. And once the sentiment improves, automatically the companies giving returns will also improve. So this we have mentioned some three company stats: the High-Tech Pipes Limited, AKI India Limited, and Spectrum Electrical Industries Limited. This is just an example to share with you. There's nothing that Chanakya is invested in these companies or anything. This is just an example which we are sharing. So High-Tech Pipes, which got listed on SME platform, is today trading at main has been trading on main board, has seen a CAGR of 45%, and these are one of the very good companies. So just these three companies we can see a CAGR of 45, 50, 60%. So Chanakya's role to shortlist such companies is the role of Chanakya to mainly shortlist such companies and provide an investment opportunity to all of its Chanakya investors to get the multi-bagger returns from these companies. So probably when we say 40% companies getting migrated to the main board, all these 40% companies have the potential to provide returns like this. And return of 40% or 50% CAGR, or say minimalist 20%, 25% return CAGR. These companies have this potential. Why? Because this SME exchange companies only get migrated to main board when they have shown growth in their financials. Only then they can survive or they can sustain themselves and get listed on the main board. And 40% companies getting listed to the main board. So we can clearly see this three company example, and this is just an example of three companies. There are more than 100 companies like this who have given return of 40 to 50% CAGR previously in 5 years. So thank you everyone. This was all about SME exchange. Ankush has already briefed everyone about the Chanakya Opportunities Fund. And lastly, I would also like to close it with the experience of Ankush and Kresha on in the portfolio management part. So Ankush comes with a very brief experience on the technical side and trying to understand the sentimental position in the market about the companies. Also understanding the so SME exchange companies are more highly dependent on investment lead managers or say merchant bankers, because they do the diligence of these companies to get main board. So Ankush has a good experience dealing with investment managers and merchant bankers, how the diligence process is done. And Kresha has more expertise over the fundamental analysis, as she's a chartered accountant and she holds more understanding of the cash flows, of the revenue growth figures, and even on the fundamental side to understand all of the parameters of the company. So when these two expertise combine together, it creates a good investment thesis to filter out the good companies and to leave out the bad companies. And also I'll like to share two things that Chanakya has just launched itself. It has been 3 months, but within span of just 3 months, we have closed commitments of about 40 CR, and we have invested in two companies. One is Tridya Tech Limited and one is Asarfi Hospitals Limited. Both the companies we invested July month itself, because we started our investment activity in this month itself. Thank you everyone for having us. We'll further take Q&A.
Perfect. I think the presentation was quite interesting and insightful. So the foremost question, if I put myself in investor's shoe, that comes to my mind, this question is to you, Jaimin, is that obviously this is a first fund in this particular segment, and you have talked about great experience in terms of track record. But from investors' point of view, to invest a corpus of 1 crore, I'm assuming that's a minimum corpus, that's
Yes.
required to be committed for this AIF. There needs to be a lot more for investor to build confidence, because obviously the space of investing world is very huge. There are many products which have far known name. They are kind of playing in far familiar territory and offer, I would say, far, I would say, easy in terms of taking a decision to invest, because at the end of the day investors are emotional in taking their decision. It's a hard earned tax paid income that they have to invest. You have talked about 30% plus CAGR. We are not going to commit any returns. Obviously equities and asset class is not like that, but this is something which is the reason why I'm asking this question to you, because you have given a very solid reason for investors to seriously think about your fund. But at the same time, beyond that, there needs to be a detailed description, which I feel is my question to you in terms of why and
Then,
how
I
what investors
understand. I
take this decision of investing in this new style with you guys.
So I completely take your question and I understand this thing, but I'll start with this way. See, every good thing starts with the first day. सो कभी ना कभी तो शुरुआत होगी कोई भी चीज की, तो वो हमेशा उसके लिए फर्स्ट टाइम होगा. सो दिस इज ऑल्सो अवर फर्स्ट फंड, वी एग्री, बट fund managers experience is not first time. They are into this field since 5 years. Krisha is into this field 5 years. So just the difference is the fund managers have been doing it individually. Now it is being done through a corporate body. So this is the only difference which is coming in. And more oftenly, see, this is an SME exchange focused fund. So there are some risks involved in this, but having the experience eliminates this risk. So when an investor expects that he wants a 30% of CAGR, whereas the other funds are giving a CAGR of 10% or 12%, a minute risk is obviously involved, and that risk has to be taken by the investor. It should be in his digestion capacity. So obviously when we talk about some good returns, a risk is also involved. But having an experience eliminates the risk factor. We can always minimize the risk. We can never, हम उसको कभी zero तो कर नहीं सकते risk को. It is obviously that. And then it is also equity markets. So, but this experience, overall understanding the market, and previously delivering a return of 30 CAGR in the last 5 years, clearly states that the fund is new, but the team or the management is not new. They are coming in with an experience.
Sure, Jaimin. This is a good, I would say, endeavor from your side to address this difficult question. And I agree, every good thing begins, from, I would say,
It has to begin someday.
yeah, absolutely. So now the subsequent question that comes to my mind when you talk about risks, we understand risks of equities and asset class. We understand equities and asset class is non-linear. There are no, guarantees. We also understand investing into a kind of a small cap stock or a medium, cap stock. But what are the risks which are beyond these two risks, which are maybe additional to your fund, which you call as an SME exchange fund?
So basically, see, being into the SME exchange, we see two risk factors. One is the liquidity issue in the SME exchange, which we see, and the second is which we see is the not proper due diligence done by the merchant bankers. So getting manipulated by the merchant banker or by the promoter may come as a risk, because we have previously also seen promoters manipulating the books. So these two things are risk factors are the main. We completely understand these risk factors and we know how to manage the risk. So we won't say that we will never have an investee company where the investee company is not having a liquidity issue in the market. There might be possibility that we invest in a company and that company stock is having a liquidity issue in the secondary market. But when we invest in that company, we try to understand that is the proposition to invest is for a longer run, for 3 to 5 years, or it is for a shorter run. So having a liquidity issue for a shorter run will be accepted. So this is how we try to evaluate and understand the risk factors. But these two are the major prevailing risks. With the previous 5 years of experience, we have managed over 50 SME companies, and we have seen how to evaluate with these risk factors. Mainly with the due diligence process, we have integrated our own due diligence process, which is an investment thesis of to and fro, where we even do the due diligence of investee companies, suppliers, and customers. So kind of this whole investment theory eliminates this both risk. I won't say eliminate, but minimizes the risk.
Sure. What is the portfolio's diversification in terms of sector-wise, stock-wise allocations?
So basically, see, SME exchange has a very limited proposition in the companies, and these companies are manufacturing companies. We are not investing in startups. So our sector agnostic is broadly into the industrial segments, like IT segment or steel segment, textiles, cements, real estate, furnishing segments. This kind of segments are our sectors. We are not looking at e-commerce segments who are into the cash burning process. If any e-commerce business is a profitable business or doing good, only then it becomes our potential company.
How much money has fund already raised, and what is the total target to be raised?
So we have almost raised close to 40 CR till now. So 40 CR of commitment we have received in just a span of 1.5 months. We have a 25% equal quarterly installment. So out of the 40 CR, we have received the 25% payment.
Also important to understand what is the fee structure of the fund, or
So
fixed or
there are
fees.
so in the direct so there are two fee structures. One is for the A1 class units, which we say are the small investors in the ticket size of 1 CR. It is a 2% management fee, and then the other one is into the 5 CR, 10 CR ticket size, which is the class B units. So that the management fee is 1.75%, and after this there are no hidden costs, nothing, no setup fees, no operating expenses, nothing is there. So only 15% of 2% of management fee straight charged by the investment manager, and also we have a 20% of performance fee, which is above the 15% of hurdle rate without catch up. So basically when we say 15% of hurdle rate and 20% of performance fee, so an investment manager easily having a target of 20 to 22% of return would only get the revenues or a performance fee to the investment manager.
Sure, this 40 crores of AUM that you said that you already raised, is this comprised of the commitment from the founders?
Yes, it includes the sponsor commitment and fund manager's commitment.
Sure. What is the total tenure of the fund, and is it an open-ended fund or a closed-ended fund?
It's a closed-ended fund. It's a 5-year term, and 1+1. So it's a 5-year term, but what we see is, as we are investing into the SME exchange companies, we usually take in. So these are not very long horizon investments that we will be invested in a company for 4 to 5 years. We usually get invested in a company for 2 to 2.5 years. So with this thesis, we see giving exits to the investors with the next after 3 years.
What is the total, I would say, frequency of reporting mechanism that you have decided for
So
this fund?
right now, what we have prepared is a quarterly reporting structure for the investors, where we will be. But despite this, we have also created. So this is the first time an AIF is providing an investor so much comfort that we will be providing an investor login portal, where on our website chanakyafund.com, so investor would be easily able to log in and check the live NAV, our portfolio companies, even financials of our portfolio companies website. Everything will be available live on our portal. So we'll be launching this portal within the next 1 month. So once the investor onboards Chanakya Opportunities Fund, he will have access to all of the investments done by Chanakya, even on the total commitment amounts received. So all of these figures would be available on daily basis with on our portal. Despite this, we will be sharing a quarterly report to our investors.
Sure. While you mentioned about the variable fee structure, will you be following the high water mark?
Ankush?
No, we are not following any watermark.
Okay, sure. And with regards to the performance evaluation, what is the benchmark that you are going to use?
So basically, it's a category 2 AIF. So normally the benchmark is the SME performance only. So we are not comparing, because the major chunk invested into the unlisted space. So where the investment into the unlisted space, we cannot compare with the Nifty 50 or all this kind of indexes. So we will compare with the SME performance. But if we get at the end of the tenure, we'll compare with the SME performance.
So maybe this is my lack of knowledge. Because I'm also new to this SME exchange.
Yes.
So that's why I'm asking this question again. So is there already an index which is available, which you are using as a benchmark for your fund?
So BSE SME IPO index is available, where only listed SME companies' performance are there. So, which I have showed the 52% of CAGR in the last 10 years. So, that is BSE SME IPO index returns. And on the other hand, similarly, the main board companies IPO index is also there for BSE for the BSE exchange. So, that is BSE IPO index, which has delivered a 21.4% of CAGR. So the IPO index is available, but particularly the index related to the SMEs, listed SMEs companies is not there.
You said 52% of CAGR return per annum for last 10 years.
Yes, last 10 years. And if we check, I can show you. So the post-COVID only, this return has, hold a minute, I will show you the slide one more time. Come to the So we can see in this chart, so till 2020, so we have seen by the end of 2020, the BSE SME IPO index and the BSE IPO index both have delivered equivalent returns. But post-COVID, after 21, from that 2021, we have seen the immense rise into the SME IPO index returns, and now the SME IPO index has delivered a 52.6% of CAGR, while the main board company's IPO has delivered a 21.4% of CAGR. And even for this, I'll also add one more thing. So there's a one product is called IPO funding. So previously, mostly the broking houses offer this product for the main board IPOs. Nowadays, these companies offer this product for the SME IPOs because of this potential. And the liquidity, now I said now, on the other slide, we have also mentioned the liquidity also has started increasing into the SME platform. So 2018, so the average volume was 8 CR only. Now on the BSE platform, now it is a 43 CR. So we can see a growth of 323% in just 4 and 5 years. Also, I show you. Hold on. So this is the potential of SME, and we believe it will be continued to the next 5 to 7 years as well. See, this is the volume growth at BSE platform of all the SME listed companies. Volume comes under this. So in 2018-19, we have seen the volume was around 8 to 9 CR, and now it is increased to 43 CR. So approximately 323% growth in the SME volumes. And
This
now,
is only for the BSE. There's also
that is
for
only for the BSE. So approximately, if we added BSE and NSE all together volume, so it approximately 95 CR on a daily basis. And this is just the beginning.
Sure. So, this sounds unbelievable because, despite such an interesting, such unbelievable CAGR, why is it that there is no other fund or fund house which has come and created a product like you have created in the SME exchange space if the returns, were so high?
So basically, point is to trying to understand SME companies is difficult for even for the retail investors, because this is not case with all of the companies. So as we said in the figure, so total number of companies may say 40% companies got migrated in the main board. 60% companies are still on the SME exchange, and about 25% companies are also there who have gone below their IPO price. So to getting a filtration of these companies is not easy for the fund managers or for this whole industry who has been all focusing on the large caps or small caps on the main board since last 20-25 years. That's why there has been no, and we also, it took us 5 years to understand this market.
Can investors directly also invest in the SME exchange fund or index?
No,
No.
index they cannot invest. They can invest in the SME exchange companies.
Okay. But
Index is
the
tradable.
return that you're talking about, 52% CAGR, this is the return of index.
Yes, this is the return of index.
Like people, like we generally one can invest into Nifty index fund or
No, no.
maybe
So investing in this index is not possible.
okay, sure. And this index is not your benchmark for calculating your performance.
No, no, no.
How can index do better than your fund?
So
Sorry?
this is a IPO index. So IPO index, मतलब basically what happens is the number of जैसे IPO index जो NSE का है वो 21% का है और ये 54% CAGR का है. So it is basically IPO price का listing जो होता है उस दिन का कितना gain है.
Sure. The unlisted portion of your portfolio, how will you
Exactly.
identify those companies? And now I understand. For the unlisted portion of your portfolio, the companies will be profitable, or it could be non-profit companies also.
No, no, we are very strict with the profitability and cash flow. Both figures have to be very positive. We are strictly not investing in any loss-making companies.
Sure. And what about the leverage in the fund? Are you going to use leverage also? Or
So we are not allowed to do leverage as CAT 2.
sure. Right. So there is another question which I just now read on the chat. Do you feel the investment potential in the other categories have saturated and hence SMEs have been performing like this? What's your view in this regards?
So what I understood from your question is that other category funds are not performing well, or what? I didn't actually get the question.
This is a question you can yourself read on the chat box.
Okay.
Do you feel the investment potential in other categories have saturated and hence SMEs have been performing like this? It means the money is moving from other categories to SMEs and hence obviously there is a bubble getting built and there is a
No,
performance
sir.
in this
No, no.
category.
We can clearly see this is not a bubble getting created, because if it would have been a bubble, it would have been done a long back. This is the genuine investments coming in, and that is why it took so much long for this market to get to this heights. It was launched in 2012, but it got hype in last 3 years. Secondly, yes, we can say that some of the liquidity from the main board companies or the main exchanges have been coming into this SME exchange. Also, one more thing, that new promoters are coming in with their IPOs on the SME exchange. So when the new promoters and new companies come in for the SME exchange IPO, so the network also gets into the SME exchange liquidity. So the liquidity increase in the SME exchange has been two-way. The new people, the new promoters, new investors coming in, starting off their portfolio with SME exchange, because these are HNI investors who start off with the SME exchange. And secondly, some of the liquidity diverting from mainboard to SME exchange.
So given the expected rate of return, from the fund, obviously, after taking all the risks that investors will ultimately be exposed to, the performance fee could turn out to be actually quite expensive. Is there a full fixed fee option also?
We don't have currently full fixed fee option.
Sure.
So that is where the skin in the game comes, and that is where the fund manager has the confidence that they can make money for the investors as well, for themselves as well, for the promoters as well. That's why we have kept the hurdle rate at 15%.
Sure. Can you also give some indication of how would this, index or such companies would have done during COVID fall?
So I'll say COVID fall में the main and Sensex and Nifty was already down by 20-25%. So obviously this exchange, SME exchange companies were also down. So the similar effect as it was on the main board, there was on the SME exchange as well. We won't say there was a hyperactive, it was better than a Sensex Nifty, or it was worse than a Sensex Nifty. It was a parallel effect in the same exchange, SME exchange.
After that, when market started recovering from April 2020 onwards, and by I think September 2020, market started recovered fully. How much time did this segment of market
The
took?
same time SME exchange also got recovered. I shared two stats. The liquidity increase. So 2020 it was 8. Then it has been constantly increasing. From 2021 it was double. 2022 it was double. 23. Even the number of company IPOs. 2020 it was 53. Then 21 it was again 90. 22 it was again 170. 120. So the increase has been parallel with the main board exchange.
What is the way to understand the financial year wise or calendar wise performance of this index for investors themselves?
Ankush can brief it more.
I'm not getting your point.
So I'm saying if investors who are prospective investors and are interested to understand more, how can they understand the pattern of the performance of this index online? Is there a website? Is there a mechanism for them to find that out? A financial advice return or a calendar advice return?
So they can get the details from the many websites. Even they can get the BSC index details. So calendar wise, and that the details will not get, but they will get the details. What is the index value at what time, which year the what is the index value, and now what's the index value is running. So that details they will get it from the BSC website, BSC IPO index detail.
Sure. So every fund, this is the last question of this webinar. I think this is quite interesting and quite insightful. Every fund has a competitor. You said you are first in this category. So you mean to say that there is no competition to your fund?
So we say that directly there is no competition, because when we say that SME exchange focused fund, so our main proposition is into SME exchange, 75%. Now there's no any other fund who has such a high proposition in the SME exchange. But in the last 3 months, we have seen some more other funds, main board funds, investing in the SME companies. So there are more than about 15 to 20 funds, other funds, who have been investing in SME companies. They have started investing in SME companies because of this potential. Since last 3 months, we can check the stats on NSE BSE side that some funds like even mutual fund subscribed in a recent SME IPO. So a recent IPO of Vidya Tech Limited, you can check the subscription. There was a mutual fund subscription in that IPO. So now the time these funds have started getting their hands on the SME exchange. But why we say we are exclusive? Because we are different, because we are completely focused on SME exchange. The team is developed so.
There is one question which just came in the chat box. If CAGR of the index itself or exchange itself is 52%, why your fund is adopting hurdle of only 15%? Why not maybe hurdle of 20, 25, 30%?
So we have to be realistic also with this. So taking a risk of getting earnings of 50% will also involve that amount of risk. We are not hyper to take such high risk that we want to go for 50% of CAGR. We have made our calculations and investment thesis looking at the risk factors, both the risk factor, liquidity issue, and due diligence processes. So ideally, if we want to stay good with a very minimalist risk process, we see a 20-25% of CAGR.
Sure. Obviously, we are not tax experts here, but taxation is also something which every investor is kind of.
It is very simple at this level because it is a pass-through CAT2. So it's a very pass-through. LTG, STG calculations will be done will be paid by the investors only. We will be sharing the calculations. But it's a pass-through, so the investor has to directly pay.
For the unlisted, portion, can you please explain how will taxation work?
So for the unlisted space as well, the time of our investments, depending upon the time of our investment, the calculation will be shared to the investor. So LTG attracts 20% investment, 20% taxation. So that investor has to pay 20%. On the private listed, unlisted space, long-term gain.
Perfect. I think this is quite invaluable. Thank you so much for your time.
Thank you so much.
We will deep dive on this fund again. Can we circulate the presentation that we have just shared with all?
Surely you can circulate the presentation among everyone. And if any investor is having further questions, we are also available. They can reach to you also, and we can stay connected.
Sure. Thank you so much for your time. Thank you everyone.
Thank you so much. Thank you.